Hi, my name is Chris Tubby. I'm founder of Trading for Tomorrow. I provide these each week just to help you guys prepare for the week ahead. First one's the macro outlook, and the second one is some analysis I do on some of the contracts that I trade. So let's start with the macro outlook. So last week lacked any major data. Bank of England though is preparing to cut rates. It's just whether it will be June or August. GDP was a surprise. It came in higher than expected at 0.6% quarter on quarter, which moved the UK out of recession. And that actually is the best GDP data since late 2021. Stocks rallied all week with the S&P in its third consecutive week of gains, and the best performance since February. Traders are becoming more confident of Fed rate cuts, but we've got 5 sets of inflation data before September, and that's including this week. The S&P and Nasdaq ended Friday with a doji, which is indecision. So let's see how the markets start on Monday, whether they will continue that good run or not. Gold was steady all week, and oil fell back Friday to the low 78s. And Bitcoin fell all week as well, closing around $60.5 thousand. The dollar and the bond were pretty flat. Investors seem keener to lock in long-dated yields now, obviously before they start to fall. Now, the Fed will soon start trimming QT. That means it's going to drain less from the markets. In the past they've continued to long, which has become a problem. So, to a degree it makes sense, but then at the same time, they're still holding about $7.3 trillion in assets, which, you've got to ask yourself, is that way too high? For me, definitely. Now, with rate cuts being pushed to later in the year in the US, will that be too late to help Biden in the November election against Trump? Now, it does seem to me, though, from what I read, that Americans seem more concerned about other topics such as abortion and immigration. Now, also, Biden maybe is trying to steal some of Trump's thunder and possibly his ideas as well by imposing tariffs on China's EVs and solar equipment. And that's possibly as soon as this week. Plus, if Biden is re-elected, he intends to undo Trump's corporate tax cuts, which run out in 2025. Now, Yellen is concerned about the level of non-mortgage lending. Again, that's something that perhaps is a little bit unmonitored, so you can understand the concerns there. On the geopolitical front, not much news between Russia and Ukraine, except of course Ukraine is still desperate for weapons. Israel's preparing for what is likely to be their final phase in Gaza. They've been warning civilians to leave Rafah before they go into full assault mode. There was hope that this could be avoided. However, to me it just seems that would have left the job half done, and to be honest, I don't think that's the Israeli style. It's just such a shame, obviously, that so many innocent lives have been lost in this war, and may be lost, obviously, in Rafah as well. The PBOC are concerned deflation. They've just got absolutely no inflation whatsoever. And rates may need to be cut further to boost the economy and make debt cheaper. That's my view, not necessarily theirs, but we'll have to wait and see on that, obviously. They do have a meeting this week on midterm lending, though. So any cuts would weaken the currency and perhaps just help to boost their their exports. Obviously, it make imports more expensive. Now, India continues to attract investment and orders away from China. Indeed, to the point now where JP Morgan plans to include India in its emerging market debt index from June. The EU fiscal union is gaining support with Draghi now backing it. You know, he was the ex-president of the Italy, and before that he was running the ECB. Now, the ECB are still on track to cut in June. In fact, according to the released minutes recently from the last meeting, a couple were keen to start even earlier. Now, rate cut prospects are firing commodities higher. We saw copper actually hit $10,000. Even Japan is not sort of immune to this inflation. We're starting to see it a little bit higher in Japan, and that is seeing households cut back on spending. Now, they will release GDP, and there's plenty of other inflation data being released around the world. And that's going to include the US, and they also have retail sales and manufacturing. Now, the UK releases its jobs data, which includes earnings, which is one of those key metrics watched by the Bank of England. So that's pretty much it. It just leaves me to say just watch the last couple of slides, and I hope you come back in part 2 to see my analysis. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.